What's up, folks? Nice morning update. Monday, January 13th. So, little break I took from these, but we'll be back now. ES has been sad. So, we have a 98.06 level. Could be 1622, but this 98.06 level is going to be very important considering this was the low in November and I believe October. So here's your November and October. So 97, 98. So you had a bink, and then we rallied all the way back up. All-time highs is 61.84. And we have just cratered back down. So that's going to be an important level. If we lose that, we fill roll gap, and then it's going to be real interesting to see how this all transpires. But I'd look for the loss of that first, and then next major is going to be the 5700. Although 5750 could come in, but we'll look at that. So anyway, right now this 98.06 really has got a hold, and so far it has. The 09 bounce this morning. Again, this is back in November. Early November is where these TPOs are from. We did clean up singles from back when. Here's your overnight, but this is kind of what's happened is we've just kind of trickled back down. Now we did drop 74, came back up, cleaned up some of these singles from the initial drop, and I think that this right here got everybody on the wrong side, and everyone's like, sweet, back up, right? That was the dip, because this is your 100-day moving average. So technically this hit, and then everyone thought, okay, cool, safe to buy. And that wasn't the case. 59.66 was a major. We broke that again, came back down, and then 58.50 is really 58.50, 55, I would say, is really the over-under now. So bulls need to get back up above at least 50 here to get this up and going. 5900, 5905 is going to be your next level up. Possibly this 2022 level, and then 43.54. Below this 809 opens up really this 57.50. So it's going to be real interesting. 18 is your S1, which is held. Pivots 88. 59.32 is the magic green line that we are now under. We popped above it. We've been toggling. It's interesting. I've got to update these, but my last level was 51.06 was that top here before that drop. And again, that's when everyone thought that this was going to come back up. Your monthly POC is at 59.52, which is about 100 above where we're at. And then this is a 60-day volume profile, which we have run out of. So we'll look at, this is a yearly volume profile. And here you can have the low level, high levels. So that 59.11 broke, that tied into your 100-day moving average. 86, 85, 86, that's going to be your next. Here's your roll gap at 57.50 down to 56.98. That was a monster, and 56.98 is another high volume node. So that's why I said 5700 is really your next target, and then 73 is your 200 day, and then you have 55.94. So we will see how all of this transpires if they rally this. So I could see this 96. What if it held again? I don't know. That is a possibility. They stick save it and try to rally this up. It's just this market structure has changed. So this is the grind, the slow grind, dip grind. This grind has kind of been lost since December. And I'd say mid-December is when we had the ranges really move and expand. And so now we're not. So look at, these are dailies. This is all tight, just grind up, auto bid, algo. we stalled, and then now it's the volatility is here. I mean, if you look at the bounce here on the 50-day back in November, that was that 97, 98 level. And then we just tore ass up. And you had a dip and then the grind, right? And I think people are really used to this type of, it's all going to come right back up, and I'm just not seeing it as of now. So we'll go back to the monthly TPO. Again, 59.50 is a big one, but 58.50 we need over. 58.81, that was also a monthly open close, but look at the 97.98. That's really what I'm watching to see. And then 57.18 if the 50 breaks and you get a roll gap. So interesting. Very interesting. Here's your SPX cash gap here, 07 to 82. We did chew into that a little bit by, I believe, 20 points. That was a monster. And 82 clears that, but we're at, the close of 27 and we're down 37. We're going to open up below that. That's going to double gap on that on some of it. 5,700 SPX is going to be very important. I would look at the 50 as well. Then your next gap down is 56.74 to 18, another monster gap. I wouldn't worry about that today, but I'd keep it in mind. Now, they could reverse this at any point and catch an auto bid, and all of a sudden, we go back to happy land. I'm not seeing it right now, and I think the volatility is here to stay at least for the next few months. NVIDIA, it's down at 131. That's crazy. We were at 148 not too long ago. And then let's take a look at the euro, because this is important. This thing just keeps breaking support. I kept thinking, and those who have watched the video for a while, I'm watching the 05. I was watching back then the 07. They stick save that there, came back up, down, down. I'm looking at parity. So 1 even is parity. We're below 3, right? That was that prior low was that 0.3, 1034, and then it kind of held up, and I thought maybe we would transition back up, but nope, down. They tried to stick save that, and then now we're headed back down. Look at that channel that's headed. So no hope for the euro. That's strengthening the dollar, bringing bond yields up. That's adding pressure to this. So again, I'm not saying that this can't go up. Bears are in control of this market right now, so keep that in mind. I think it's sell the rips type of environment until further notice. This could change on a dime. Heavy week with PPI, CPI, all kinds of stuff coming out. So we're going to see, this is also the last week with Biden before Trump gets in office. So these numbers are going to be different. I don't think the election's over, so maybe more truthful numbers. We all trade on bullshit numbers. In some sort of sabotage, maybe. I don't know. I would be mindful that anything is possible. We could continue to move down from here. We could reverse here. And I think that this is going to be a largely swingy two-way trade. But as of now, unless we get back up above 58.50 ES, this is in bearish structure. I'll be in the room.